Hi, this is Joseph Falbo, Certified Financial Planner, and today I want to talk about an article from Barron's. Nothing against Barron's, just an example of what not to read, and it has something to do with much of how I believe the financial media, in my opinion, can be bad for your financial health, especially for long-term investors. This is why you must be careful what you watch, listen to, and read. This article in particular discussed about August, September, and October. Is the only period in a calendar year historically where performance has been negative. That was what the whole story is about. I want you to be aware of this kind of stuff. What does a story like that signal? It signals, oh my gosh, I might lose money during this time period, and I should make some changes in anticipation of this time period. Now, add in all the news about the different variants, and now this can be a source of stress for an investor's mindset. Now, let's just say for a minute that Barron's is correct. So this article is saying that during that time period, the market's going to go down. What if they're right and things do go down? Here's the thing. Who cares? Okay? Who cares? The article is signaling to long-term investors that they should avoid all temporary downturns. And what if I told you that's exactly how not to think as a long-term investor? Because what that does to a long-term investor is it starts making them focus on today and make them think it's all about the short term. And when a long-term investor gets focused on today, it's not good. Now, a great question to ask yourself is when the market actually does go down 10 to 15% at some point, or let's say in these months, how is that going to change your life? Is that going to change any of your goals? What is that going to change in your plan? A lot of times you're going to realize the only thing you're trying to do is speculate when to get in the market and speculate when to get out of the market, which in my experience leads to failed investing time and time again. So this article is signaling that a downturn may be coming, because they don't know for sure, and that you need to do something about it, and it could have long-term investors focusing on the short term. My answer to them is, one, they don't know if the market is going to go down, and two, if it does go down, we don't care much because we already asked ourselves the question, how is this going to change our life? If you have your plan in place with a diversified portfolio suited to that plan and the goals in that plan, and you have an advisor giving you, for example, this type of behavioral advice, you start to realize this is just the normal nature of the markets and it should be built into your plan. So I hope you enjoyed this message.